So another 50 basis point rate increase from the Bank of Canada today. The overnight rate has gone up from 1% to 1.5%. Now, everybody's saying it has hitting at the housing market. For sure, it is slowing down the housing market across the country. But if you're thinking this has reached the bottom, well, it's too early to say, because what we are seeing right now in terms of housing data, we are looking into the past. We are looking at the lagging indicators. For example, if we are looking at the May statistics in terms of the housing activity, most of those buyers who are buying right now, they have pre-approvals from the month of March, for example. So when you take a pre-approval from a lender, you can lock the rate up to 90 days. Okay, so a lot of buyers, they're having rates locked since the month of March, and they can still leverage that lower rate when they close their property today. So a lot of activities that we are seeing right now, they are based upon the previous rates that they have locked since then. So we haven't seen the real impact of rising rates yet. So we have to wait until this whole pre-approval process is expired and the buyers are about to make purchases based upon today's rate. So I think we have to wait until sometime August or September before we can really starting to see the real impact of the rising rates and tightening monetary policy on the housing activity, both from the number of sales perspective as well as the decline in the average home price. So I think the bottom has yet to be seen. We haven't seen the bottom yet, and it is going to continue getting worse, because the Bank of Canada is determined to raise rates significantly to control the inflation. I have been talking about on my channel about the inflation. It has two main causes. Number one is monetary phenomena, where we have too much liquidity in the system. And then number two is the global supply chain disruptions. Of course, Bank of Canada cannot control the global supply chain disruptions, but they can definitely kill the aggregate demand. So raising rates will definitely kill the aggregate demand, which will definitely kill the consumer spending. Yes, it can bring the inflation down, but it can also kill the GDP growth. And this is when they will likely to change their course. We have to see when something starts breaking up before the Bank of Canada will change their course. So I think we have a long way to go, and then we can see what's going to happen in terms of the economic growth as well as the controlling inflation. So hope this is helpful. Put your comments down below. Let me know what you think and what you're seeing in terms of the market activity, and I will see you in my next video. Take care.